Hello and welcome back to another episode of the Investor Financing Podcast. Today we're going to talk about multifamily financing, 5 units and greater. So you're looking for or maybe you found it, a multifamily property which is 5 units to 100 units or anywhere in between. What are your financing options? Okay, so people always say, I want to get pre-qualified for multifamily financing, right? It really isn't a condition of you getting qualified. I mean, there's certain parameters you need to fit in for certain debt, like agency debt. You have to have a net worth equal to or greater than the loan amount. You have to have experience with multifamily if you're buying multifamily. That's Fannie and Freddie agency debt for multifamily. But we'll talk about that in a later episode. We've already talked about that, and you can go and search in the search bar on YouTube and type in agency debt in my library, and you're going to find tons of examples of that. But we're going to talk right now about, you're buying a 6, 10, 20, 30 unit property. Maybe you don't have much experience in multifamily. You've done some single family investing, you own some real estate, and you found a great multifamily property. It's been mismanaged, and you could definitely move rents up. There's a lot of CapEx or some renovations that need to be done. This is a great candidate for what we call bridge financing. And so on our bridge financing program, if you're familiar with like a residential fix and flip loan, it's kind of similar, right? We're going to look at the purchase price. We're going to look at the CapEx budget. We're going to look at the stabilized value after you move rents, do the improvements. And these programs, we can do gross loan amounts not to exceed 75% of the stabilized value. So one of the highest leverage multifamily programs I have is we'll do 87% of total project cost, meaning we'll fund 87% of the purchase price. We'll fund 87% of the construction or CapEx, which is held back and funded as you make progress. So you got to come to the table with 13% of total project costs plus closing costs. And if the in-place debt service coverage ratio is less than 1%, we may have to build in an interest reserve until you can get that property at a 1 or better DSCR. Hi, if you'd like to book a call with me and discuss SBA financing, whether it's a 7A or 504, or you just don't know where to start, maybe it's a startup business, you're buying an existing business, you're buying a franchise, you're building a new office building, you want to expand your existing business, we have multiple solutions. I can walk you through the 7A and the 504 and the SBA loan process. And if you have any other questions on any other types of financing, I'm happy to book a call with you. The link's below. Look forward to seeing you soon. But this is a very aggressive bridge lending program. We can write these loans for 12 to 24 months. You come in, you stabilize, you execute on your plan, and then now you refinance. And your refinance options could be regional bank, credit union, could be agency debt. It could be a bridge to agency type of program. There's lots of exits, but we got to first start with, okay, how are we going to get the occupancy up to 90 plus? How are we going to move rents up? How long is it going to take to bump the rents on each of these units? What's our plan? So we're going to need a pro forma on this loan to see what your lease up and your renovation plan will be, what it will look like. But this is a fantastic program because, like I said, it's very high leverage. You're coming in with 13% of total project costs if the total loan amount is less than 75% of the stabilized value. So most of the newer or investors that are buying multifamily aren't going and buying stabilized because a lot of the meat is already off the bone. Versus these value add that have been mismanaged, the mom and pop, they haven't raised rents in 8 years. There's a huge play here where you can force the appreciation by moving rents because commercial real estate is based on income, right? And so if we can move the income, we move the value and we can force the appreciation. So if you're interested in learning more about bridge financing, feel free to reach out. Hope you enjoyed this short episode, and I'll see you on the next one.